Ladies and gentlemen, welcome again to my YouTube channel where we discuss a lot about finances, we discuss about money, we discuss about businesses, how to become a financially free person, how to earn extra income, and anything related to finances and money and everything to become rich. Everybody wants to become rich. You don't want to be a poor person. I don't want to be a poor person. And that's why I'm here to give you that information that you need to every aspect, to be equipped with everything that you need so that you can become a financially free person. That is the ultimate goal and should be the ultimate goal of everyone. And ladies and gentlemen, if you're seeing me for the first time, my name is Sir John Mweri. I'm a professional accountant and I'm the guy who has information. That is, I'm going to give you that information right now for you to utilize it and so that you can be able to help each other. Now, in case you have not subscribed to my YouTube channel, I just need you to do something very fast before we even continue. Just hit the subscription button and then ring that bell so that anytime I upload a video, you are the first person to get that video, all right? And don't even forget to give me a like for this particular video. And without wasting time, I want us to get to the business of the day. And guess what we are discussing today? We are discussing the big 5 pillars of financial freedom. Very interesting. The big 5 pillars of financial freedom. When you talk about financial freedom, what entails financial freedom? What are we talking about? What is composed of financial freedom? What should you be knowing in your head so that you can be a financially free person? Ni vitu gani hizi unafaa kucheza nazo 1 2 3 1 2 3 so that you know what financial freedom entails. And that's what I'll be discussing today in our next probably 15 minutes or less than 15 minutes. We shall be able to exhaust them comprehensively one by one. And I'm telling you, if you just follow those pillars well and do them on how they're supposed to be done, you're going to realize that the life becomes very interesting and it becomes very sweet, and actually you'll not be able to be thinking that everything is just struggling and struggling and struggling. It becomes very interesting. Now, let's get to the business of the day without wasting a lot of time now. Ladies and we are talking about, ladies and gentlemen, you are talking about the 5 big pillars of financial freedom, Of course, I'll be writing them down here so that you can get them, so that the conversation can flow. And our first pillar is what we call income, right? Income. And you might ask yourself a question about income. You know, you have so many types of income or so many categories of income. You can be getting your income from salaries. You have a business that gives you income. Probably you do this boda and what, you are a driver, you are a farmer. It doesn't matter where your income comes from. The most important thing is that you have some source of money. Now, we have 2 types of income. We have the ordinary income that you are getting in normal or daily, in your daily deeds, or what we call passive income, all right? Passive income. And we normally say in investments that passive income is income that is going to be, it's income earned through minimal efforts, or income that you're going to earn through investment that you have actually not even participated in doing events such as farming or going to job to work somewhere. Whatever you earn at the end of the month when you are employed, that one is a salary and it's not a passive income. So passive incomes are incomes obtained, example, from money market funds account. Those are passive incomes, all right? Now, what am I talking about income? When I talk about income, I'm saying that it doesn't matter how much money you earn. What matters is how much money you keep, or how much money you save or you set aside for investment purposes. Because, ladies and gentlemen, let me tell you, that money that you normally keep aside or put aside is the one that is going to ensure your financial freedom in future. And that's why income becomes the one of the biggest pillars of financial freedom is the income. You might be earning 500,000, you might be earning 600,000, you might earn 700,000, but you don't have money that you're putting aside. And you find that a guy who is earning like 50,000, even less than 100,000, they even have a certain percentage that you normally put aside in an investment account. And you find that that person in form of assets is equipped with even financial security than this person who is earning 700,000. In most cases, you will find people who earn more money, like 1 million, 2 million, 500,000, they are more into debts. They think that their income is going to cover the debts. So they compile debts in their lives and they compile liabilities and they end up growing their liability columns. But this person who is earning small income is actually growing their asset column. So at the end of the day, you might be earning a lot of money, but asset-wise, you are growing your liability column. But this person who is earning small amount of money, asset-wise, they are growing their asset column. So, and you have nowhere to be compared. They are far much ahead of you than you could expect. All right. So income is very important. Where you obtain your income from, it doesn't matter. Hata ukue mtu wa mjengo, that one is not a problem. As long as you're putting aside something to an investment account, or you are putting a certain percentage that you're going to say, this is the one that is going to secure my financial freedom, it's very important. The other aspect of income is actually looking for multiple income or multiple sources of income. For example, where you say that I'm going to look for multiple sources of income, I'm not going to depend on one source of income. Now, you might be a boda driver, and then you say, I'm going to put up a kiosk somewhere, or maybe a laundromat somewhere, that I'm going to employ someone. Now, that one is another source of income. Now, you could be getting some money, your daily incomes, and then you put them in an investment account like money market fund account. It means at the end of the year, when the money is compounded, you are getting some income. Another person may say, now I'm working here and I'm going to put aside some amount of money in a SACCO account that is going to be giving me some dividends. Again, dividends are passive incomes. That is how we are saying about looking for multiple sources of income to actually make sure that you have multiple streams of income. Looking for business opportunities. You have to search for the problems that people have, because when you identify a problem in a certain community, that is where the business idea comes in. So passive income is not just an income, or an income is not just an income, but you have to make sure that you have several sources of income. Why is that important? Because you are going to broaden you are going to have a wide opportunity of saving a lot of money. All right, because when you have one source of income, for example, you have only one source of income that is giving you 50,000, and you're putting aside 20% of that, then that 20% is what you are going to save for a longer period of time. That means the person who have multiple streams of income can actually be able to save more than you. That's why I'm telling you that you need to keep on to be proactive in looking for multiple sources of income. So income, ladies and gentlemen, becomes the first one of the biggest 5 big pillars of financial freedom when it comes to securing financial freedom. Just think of passive income. Just think of looking for extra sources of income, and make sure that you put aside some money for investment purposes. All right, let's go to the second pillar that you're supposed to think about anytime financial freedom comes in your mind. The second one is what we call investment. All right, investment. Now, ladies and gentlemen, you realize investment is a broad name. It's a wide name, because when we talk about investments, actually we are saying that employing money to work for you. Now, take an example of an organization. Organizations employs employees. Then employees are going to work in that organization up to infinity, because you don't know whether you're going to get out of the organization, or you cannot measure the time that you can get out of that organization. So actually, employees are assets of the company. And what do assets do? Assets put money in people's pockets. So when an employee is not in that company, it means the company cannot be able to make some money. And that's how you're supposed to define investment. When it comes to investment, you need to employ your employee, and your employee should be the money that you're getting. And that's why we started with point number 1. When you save here, when you put aside 20% of your income or 30% of whichever amount is favorable with you, you put it in an investment account. You don't put it in a bank account. What is it going to do in an investment account? It's going to earn some competitive yield that is going to ensure passive income. And then what is this passive income going to do? It is going to add to your incomes that you're getting, so you get extra source of income. And we have multiple investments, ladies and gentlemen, that you can think of. Think of investment in biological assets. Think of investment in financial securities, such as treasury bonds and treasury bills. Think of investments in money markets, for example, money market funds. Think of investment in corporate bonds. Think of investments in commercial papers. All right. Think of investment in real assets. Real assets and rates. You can think of so many investments that you can think of so that you can put your money into work. You need money working for you even when you are working for money. Think of investments like businesses that are not going to require your presence. That is what you need. And that's why you need to think of investment as the biggest, as the one of the 5 biggest pillars of financial freedom. So without investment, you are not securing your financial freedom. Without income, you will not secure your financial freedom. You will if you have one income, but it's going to take you a longer period. But if you identify multiple streams of income, and of course, it's going to take you less period. So investment is very important. It's not just an investment, it's going to be a secure investment. When you decide to invest, look at the companies that have been regulated by the Central Markets Authority. Look at if they have the liquidity to actually be one of the best investment companies in the industry. All right. And number 3, ladies and gentlemen, I have my Mwakenya here so that I may not forget the points. Number 3, we are talking about we have talked about income, we have talked about investments. Number 3, we are talking about savings. Now, here we were talking about multiple streams of incomes. I think number 3 should have come to number 2 so that now whatever you save, you invest. But all in all, you understand what I'm saying. It's one of the 5 big pillars of financial freedom. We have said that any time you receive your income, it doesn't matter the amount that you're receiving, whether 10,000, 20,000, you work with a budget. Ladies and gentlemen, let me tell you something. You should never spend your money without a budget. And that's where you are going to get some money to put aside. When you spend your money without a budget, you find yourself that you have used everything and then you are wondering what wanatuambianga to budget. Now, what should we budget here? Pesa yote nimeearn 50,000, nimegawa yote imeisha, because you did not come up with a good budget. Or maybe you are exaggerating your expenses. And that's where you need maybe to cut your costs. And we are coming to that point. So savings are very important. And in most cases, there is a rule that there is a formula that we normally use, a 50 to 30 to 20 rule. This formula is very common to people who want to actually make sure that they have saved something. And we normally say that 50% goes to your basic needs. To your basic needs, for example, rent, for example, electricity, food, transport, and so on and so on. 50% of the income that you are getting should go to your basic needs. 30% should go to your wants. Wants are wants, and you know we are human beings, we need to enjoy ourselves. And wants are things like vacation and so on and so on. Maybe you need to buy a nice dress, maybe you need to buy something in your house and so on. Those are wants, because needs gets into 50%. Then this 20%, just ladies and gentlemen, these are very important, but the more important thing, because there is a time that this 50% will not be available in your daily income, because you'll no longer be working. So what in the coming years, what will be more important is this 20%, because if this 20% is accumulated for a longer period of time, is going to ensure your financial freedom. All right. But if you now take the whole 100% and put it into your stomach, then it means that even the financial security itself you don't have. And you're actually making your future look worse. And you are going to be depending on your children, and you become a disturbing parent because you don't have any money in your pocket, or you did not make any kind of investments. Ladies and gentlemen, you have said that if you feel like even the financial securities or the whatever, these things called treasury bonds are not in your level, you can even do farming. You can buy some biological assets like sheep, like goats, like cows, and so on. And so those are assets that appreciate in value, and they can actually even give you some passive income, because you don't have to be there for a cow to make milk. No, you take the cow to graze, and then jioni unakuja unakamua ng'ombe wako, and that is it. You have some income, you sell the milk, you have some income, and actually you can employ someone. So there are so many sources of passive income. Do not just be confined with only treasury bills and money market funds. And money market funds actually have low returns. They have low returns. But if you look at biological assets, they'll have high returns. Sorry, and so on and so on. So savings are very important. 50-30-20 rule, ladies and gentlemen. You can play around with this formula to see whether the allocation of how you allocate your money is going to be effective when it comes to the budget that you create. All right, now let's go to the fourth and the most important one of the big 5 pillars of financial freedom is managing your expenses. Number 4, we are talking about expense management. Here is when you need to differentiate between a need and a want. There are so many people who doesn't differentiate between needs and wants. Needs is something that you are going to stay without. You cannot stay without. But a want is something that you can actually stay without. For example, you need food. You need to eat food. You need to eat good food. But doesn't mean that you need to eat chicken every day. True or false? But if that is your lifestyle, it means that you have invested somewhere and the money that you're getting can be able to afford your lifestyle. But for someone who is trying to secure their financial freedom, and for example, they don't have a lot of streams of income, then you don't have to enjoy yourself so much to an extent that you forget your future life. You need to make sure that you have concentrated on your needs. For example, you need to wear clothes. Clothes are basic needs. But now, there are clothes that are going to be exaggerated in prices. You can go to buy clothes in Gikomba or Muthurwa, but you don't have to buy clothes in CBD because the CBD clothes are very expensive. So when you go for CBD clothes, which are very expensive, then those are wants. They are not needs. But when you go to somewhere else actually to look for clothes that are a little bit cheaper, they become needs. It means that you have saved some money. So you need to differentiate between needs and wants. For example, when it comes to transport, you need to get to town from Thika. You have 2 options. You can either board a matatu to go to town, of which is going to cost you 100 shillings, or you can ask for Uber, which is going to cost you almost 1,000 shillings. Now, transport is a need because you need to go to town to do some 1, 2, 3. But now asking for an Uber, it means that you are now incurring an extra cost. That one is not a need, it's a want. But again, if the current lifestyle of yours or the passive income you're getting or the income side can be able to cater for that, I'm not going to tell you not to do that. Because again, remember, we had put aside some money for wants. If your wants or the allocation of wants can be able to accept that, well and good. There is no problem. You can do that. All right. So management of expenses is very important here because this is where people go wrong. You end up spending everything. You end up spending every penny of your income to your expense, to your wants. You wear so much expensive clothes. There are saying that says that you need to live below your means. Living below your means doesn't mean that ujinyime ati ndo usave. Hapana. Living below your means actually means making sure that you have put aside something, at the same time making sure that you have saved and invested and you are still enjoying life, right? That is the fourth one of the biggest pillars of financial freedom. And number 5, before I forget, ladies and gentlemen, we are talking about financial education. Very important. Financial education. Now, one of the biggest assets that you have as a human being is your brain. One of the biggest assets that you have as a human being is your brain. Now, guess what? Very interesting. If your brain is not working properly, or if your brain is not equipped, then it means even here, you cannot be able to do anything. So actually, what should come first? What should come first is how you should educate your mind in terms of money, how money works, how investments work, businesses, nini, such stuff. And that's why Sir John Moiri is here to explain to you this thing. Now, right now, what I'm taking you through is through financial education. I'm telling you what you're supposed to be knowing so that it can help you become a person who can make good financial decisions even as you go on. I'm telling you this because I need you to be equipped with skills and knowledge of how you can become a good person who can be able to make good financial education, good financial decisions as you continue to secure your financial freedom. So, ladies and gentlemen, what I'm saying is that your brain is the biggest asset that you have. And if the brain is not equipped, it means that you are not even going to get to make some money. Kumbuka tu kuna watu wanakuanga tu wamekaa tu, they don't want to read books, they don't want, when they find like a video like this, they just scroll because this guy is just like talking. Hizi mambo ya pesa tunazijua bana. Mi sinaingia tu crypto pale naweka pesa and that is gone. And you find that people do not want to take time to actually watch these kind of videos, but mahali kuna mushene mingi ndo watu wanataka kuconcentrate, concentrate. Huko ndiko utapata watu wengi wamejaa. But when it comes to financial classes like this, someone does not want to sacrifice their 10 minutes, 12 minutes to watch such videos. And you find that these things that you normally ignore are actually things that are going to help you in future. So financial education is very important. You need to do a lot of research on how money works. You need to do a lot of research on investments, on businesses. Remember, even when you want to start a business, you need to go to the ground. You need to go to the ground so that you can teach yourself how to start that business, the requirements, and so on and so on. So these are the 5 big pillars of financial freedom, ladies and gentlemen. Whenever you think of becoming a financially free person, look at the income. Concentrate on looking for more opportunities. Look for more opportunities for incomes. Have multiple streams of income so that you can be able to save more. And when you save more, you can be able, you save in an investment account. These things are intermarried. Each one is intermarried to each one because you get income, you save. After you save, you invest. Then when you invest, you first of all, before you save, you need to make sure that you have allocated your budget well. When you allocate your budget well, is when you get money for savings and for investments. And for you to do all this, your brain has to be equipped. All right? That's why we are calling them the 5 big pillars of financial freedom. And when you have these ones in your mind, you're actually going to go far and it becomes very interesting. So, ladies and gentlemen, think about that. See whether it helps you. And I think I have exhausted my points that I had. Sorry. And now, this is Sir John Moiri again. If you have not subscribed, make sure you subscribe. And let me tell you before I finish, financial freedom, it is not an option. It is a must. You don't have a choice. You need to be financially free. You need to be financially free, and you need to put up strategies that you're going to use for you to become a financially free person. Zoea kuweka pesa. Put them in a money market fund account. Put it in shares, buy stocks, buy treasury bonds, buy biological assets, and so on and so on. Open businesses, because that is what you will need when you are 60 years old. All right? So that one is not an option. And let me tell you something. Action is better than inaction. And having said that, guys, I hope this video has been of help to someone, and actually it has made someone open up their mind. All right? Thank you so much. This is Sir John Moiri. We meet in our next video.